What's going on, guys, and welcome back to another video. So it seems everywhere you look now in the markets, it's all doom and gloom, and it seems to be a bit of a bloodbath or bloodshed as well, with a lot of positions going into the red due to many different global reasons or issues. So in today's video, we're going to go over my dividend and growth portfolios and see how they're performing in this bloodbath of a market, in the current bear market. And we're also going to be investing a few hundred or more in both of these portfolios today, and we'll go through my thought process behind it. So all that being said, let's get straight on into today's video. So we're going to start with my dividend portfolio on Trading212, which is comprised of 50 different stocks across all different sectors in the market. We currently have about €771 invested, as we can see here, and we're only down about 1.1%, which is actually good considering a lot of people's positions could be down 40 to 50% at this stage, all depending when you bought in originally. But we can also see here we have €140 free funds. So we're going to have a look through each of these sectors in terms of portfolio pies for different sectors in the market, and we're going to invest accordingly into today's market as well. Now, just before we look through my portfolio here on Trading212, it's worth emphasizing, and I say time and time again, as a long-term investor, you should actually welcome market conditions like there is at present, with a lot of positions going down in value, some even 20, 30, 40%, some blue chip stocks, which again is crazy in the short term. But again, if you're a long-term investor, you need to realize this is good news, because it means you can dollar cost average into your positions to get your overall average cost down. So effectively, when the markets do bounce back and go back into a new bull market, you're actually making more of a profit. So let's firstly start with my communication services pie. We only have about €53 invested at the moment, and it's up 6.3%. Now this is probably one of the only sectors at the moment where all my positions are in the green. We can see Walt Disney here is up 2.5%, AT&T up 3.5%, Verizon up just under 5%, and Omnicom Group is up 18.4%. Quite surprised with this one here. But today we won't be investing further within this pie, again because we're all in the green. We're only looking to invest further in stocks that are currently in the red. Now, as we have a lot to get through today, we're only going to fly through these positions in terms of what I'm investing in, because again, we have a lot to get through. So communication, or consumer discretionary should I say, excuse me, we have €104 invested, so over double what we have in communication services, mainly because we have invested further here because of dollar cost averaging, and a lot of these positions going into the red. We're down about 4.69% overall within here, all 5 are in the red. Again, as a long-term investor, you should welcome this. Now, we won't be investing further in Target today because it's only down 0.39%, and as mentioned in prior videos, I don't like investing further unless the stock is down 3 or more. So in that case, we're going to be investing €5 into each of McDonald's, Target, Starbucks and Snap-on. Again, €20 overall investing might not seem a whole lot at all. In fact, it's not in any stretch of imagination. However, consistently long-term dollar cost averaging in to positions that are in the red will definitely pay off long-term. So I'm going to be investing €20 into consumer discretionary today as well. My third sector is consumer staples. We're up 1.7% overall. Now we can see 2 of the 5 are currently in the red, with Walmart pretty much at break even. So again, for today's video, we're only going to be investing €5 further into Unilever because it's down 4.89%. My best performing sector at the moment is in energy, and it kind of just shows the importance of investing across all different sectors because different sectors react differently to different market conditions. We're currently up 53.16%, although we only have about €53 invested. We can see all are in the green. Most notably is ExxonMobil up 33% and Chevron up over 27% as well. Now we can see the delisted security here, the RDS, which again changed into Shell. So again, we'll have to get rid of that out of the pie. However, I'm very happy with the progress here with energy, and we will not be investing further here today because they're all in the green. Next up is one of my favorite allocations of sector in terms of financials. Another is tech, but for now in dividend portfolio terms, financials is probably one I'm always delighted to see that's actually in the red, strangely enough, because it just means I can buy more. Now we've invested €30 more here already. We put €10 each into JP Morgan and Chase and Goldman Sachs, and then we put €5 each into Bank of America and Citigroup, and we left Montreal, the Bank of Montreal that is, we left that alone because it's up over 4.5%. But again, if this stays in the red over the coming weeks, I'm actually going to put a lot more capital into the likes of the financial sector because it's one I'm truly interested in. As we move on down the line here, next up we have healthcare, which is pretty much a mixed bag, although we're up about 3% overall, which again isn't bad, I suppose, considering the current market conditions. Now, while we're just talking about current market conditions, it's worth noting, you can see from my own investing that, again, this shouldn't phase you at all as a long-term investor. I can't emphasize that enough, because again, you only lose money if you actually sell a stock So again, if long term, just again, obviously it's not financial advice, but my own personal investing style is just buying more consistently, not large amounts, just tiny amounts continually, because again, long term this will definitely make a difference, because you can drive down your average cost as low as possible, which when the good times do come back, you're going to make more of a profit. So today we can see here we have 3 of the 5 are in the green. We have Johnson Johnson up 2.8, AbbVie up 27%, I'm very happy with that one, and Cardin Health is up over 12 as well, which again is respectable enough, just under 12 that is. So today we're going to be putting €15 further into the healthcare pie. 10 of that's going to go into Pfizer because it's down 12.5%, and Abbott Laboratories is getting €5, which is currently down 8.29%. We then have my industrial pie here, where we are down about 2% overall and have about €83 invested. Now again, here we can see 3 are currently in the red. We have 3M down 12%, Caterpillar down just under 5, and Waste Management down 4. Now I just invested €5 each in here. Again, it mightn't seem a whole lot, but consistently doing this week in, week out will definitely make a difference long term. And then we have Lockheed Martin up 34.33%. So it's crazy to think within the same sector that different stocks are actually acting completely differently in polar opposite directions to one another, although they are in the same sector. So it just shows the importance of diversification across the market as a long-term investor. Next up, we have a sector that, in all honesty, just materials and utilities I don't have a whole lot of interest in, but again, I want to have exposure nonetheless. Now we're down about 11% here overall. 3 of the 4 are currently in the red, with the exception of Packaging of America, up 7.8%. But for the purpose of the top 3 here, all 3 are fairly in the red, which again as a long-term investor is good. However, saying that, I don't want to put a whole lot of capital into like materials and utilities. I just want to have small exposure. So for that purpose, I just put an extra €5 into each of these 3 positions. Another one of the sectors I'm very interested in is real estate. Now we're currently on about just under 4% here, and we have about €81 invested. So again, small amounts of capital here at the moment, but again, over the next few weeks, I'm hoping to get my overall account value within this dividend portfolio to well over 1,000, and we'll kind of push on from there as well. So again, today we put €15 more here. We put 5 into Realty Income, we put 5 into Essex Property Trust, and also 5 into Stag Industrial. Welltower is currently in the green, so we left as is. And National Realty Properties is down only 2.5%, so it's not below my quota of 3% yet. So if this drops below over the coming days, I'll be sure to invest. But for today, we invested €15 further into this sector. Another sector that I'm very interested in, and we'll see a lot more of in my growth portfolio in a few seconds on eToro, is in technology. Now we're currently down nearly 5% here in the dividend portfolio, which again, I'll welcome with open arms, just like financials, etc. I always will definitely buy more here. Now today, we're only after investing a further €15, 5 into Microsoft, 5 into Intel, and 5 into Accenture. Again, Cisco Systems does not breach the cap yet, and we have IBM currently in the green, up 2.5%. But again, just like financials, real estate, etc., technology is definitely one I'm going to be very bullish on over the coming months and years. And the final investments today in my dividend portfolio, which will run up to 140 invested and brings up to just about over €910 overall within the account, is in utilities. I just put €10 further here today, 5 into Next Era Energy and 5 into American Waterworks. Consolidated Edison is up 5.6, we left that as is. And again, Duke Energy is only down 0.4%, so we're going to leave that unless it goes or drops below 3% over the coming days. So that's kind of where we're at with my dividend portfolio. I didn't really go into too much detail here because we still have to go through my growth portfolio on eToro, which we're going to do right now. So here we are on my growth portfolio on eToro, where we currently have about $368 invested at the moment, and we have $111.15 in free funds, which we're going to invest today. Now overall, this portfolio is at about $29, which is about 20 or 22 euro. So again, it's not a whole lot, all things considered, considering the likes of Facebook up top had a bit of a meltdown and is down 25%. So that definitely has a large part to play here. And then the overall market conditions as well. We're in a bit of a bear market. In fact, we're in a full-on bear market at the moment. So again, a lot of these kind of growth stocks will be hit hard. But again, this is long-term investing. You need to realize that, especially with growth stocks, they'll be a bit more volatile than the likes of dividend stocks. So you need to expect that and ride the wave. And again, invest further when they're down. For example, here we can see Facebook is down 25%. Tesla is currently down 6.78. Amazon down 1.7. Apple is down just under 4%. We then have a rare green here in the form of Disney, up 2.5%. We then have Google down 2.65%. Microsoft is down 1.5%. And we can have a look below this now as well to see my remaining 3 or 4 holdings within this portfolio. So currently it doesn't get much better the further we go down this list, and the final 4 holdings here, we can see Microsoft is down 1.4%, Flutter Entertainment is down 13.13%, MasterCard is down 1.97 and Visa is down just over 1% as well. So definitely there's loads room here to dollar cost average, and I will be pumping a lot more money in here over the next few weeks. Just in my dividend portfolio, I do want to hit this over the 1,000 target just to kind of get it over there as well. And over the coming days, we are going to be doing my monthly update in terms of my 0 to 1 million, which will kind of give a brief overview on these two portfolios, as well as real estate, crypto, etc. So be sure to stay tuned for that as well. But for today, we're going to just look at my blank, kind of very basic Excel here to see how I'm going to break down this $111 into my current stocks. So again, a very basic overview here of how I'm investing this capital, again mainly due to how much a stock is down. We're going to put $31 into Facebook, $25 into Tesla and Flutter Entertainment each, and $15 into Apple and Google. So as you can see now, my available cash at the moment is only 15 cents. So we did invest that $111 across various funds, which we looked at a few seconds ago. Now, as I know, today's video kind of went a bit overboard in terms of length, but again, I just want to give you an update because I haven't made a video in about a week now, mainly because I'm up the walls with a lot of other things outside of YouTube. So again, that's where we're at the moment. We invested 140 or further into my dividend portfolio and $111 into my growth portfolio as well. Again, as mentioned a bit earlier, in the coming days we are going to be making a full-on updated video, a monthly update video that is, on how we're kind of progressing in that 0 to 1 million euro 5-year plan. So be sure to stay tuned for that. We'll probably do that Thursday or Friday at this stage. And again, please turn on your notification bell so you'll be aware when that video comes out. But today, that's just what I wanted to go through. And again, my final message to definitely long-term investors is to not panic in the current market conditions. Things will get better because markets are cyclical. They need to go up as well as down. So this is the kind of time to take action and buy further to dollar cost average down. So when the good times do come back, you're going to be making more of a profit because your overall average cost is less. So thanks very much if you've made it this far, and I will see you all in the next video.